Morgan Stanley analyst Adam Jonas says that Tesla's revenue will be equal to the combined revenue of General Motors and Ford in only a few years. Hello, my friends. Welcome to the Electric Viking. My name is Sam Evans. I'm coming to you here from Melbourne, Australia. Welcome back to all you new subscribers, and welcome back to everyone else as well. Adam Jonas, who is he? Well, first, let's establish whether Jonas has any credibility. He works for Morgan Stanley. You would think, well, he must have some experience to be working at Morgan Stanley, right? Well, let's have a look at his TipRanks profile. TipRanks is a website where you can find out the success of the predictions of different analysts. And interestingly, some of the analysts that get paid a lot of money are very, very unsuccessful. It's very interesting to see actually where analysts rank and how well they do. Personally, I don't take any interest in analysts who have a 1, 2, or even a 3-star rating on TipRanks. To me, if you can't get above 3 stars, then your word is not worth anything at all. Jonas ranks at 4.5 stars, and he's ranked at number 645 of 7,800 investment analysts. So he's ranked just in the top 10%. Which is pretty good. If you compare him to all TipRanks experts, the 16,000 experts on TipRanks, he's ranked number 886. So he's just in the top 5% of all TipRanks experts. So I'd have to say he's on average better than the Wall Street average. Now currently, Jonas recommends you buy Tesla, buy Rivian, and you buy General Motors stock. He suggests that right now you should be selling if you own Lucid and Ford stock. So what is he saying right now about Tesla? Why is he saying you should buy the stock? And he is saying you should buy. In fact, he sees a price target of $1,300 US, and the stock right now is under $900 US. So that's a pretty good gain if it does hit that number. What else has Jonas said about Tesla? Well, he said the following: Tesla will surpass General Motors and Ford in US market share, and their revenue could surpass General Motors and Ford combined by 2027. Sounds a long way away, but if you think about it, it's actually only 5 years away. And he's predicting Tesla will surpass the combined revenue of two of the largest automotive companies on the planet. And if you watched my video from a month or two ago, where I predict the top car sales winners in 2030, then I think you'll find that my predictions are fairly similar to Jonas's in terms of when it comes to Tesla's sales. I'll put a link to my predictions in the description below. Tesla has taken the automotive industry by storm, and it has forced big changes that OEMs, legacy auto, would not have made on their own. If you don't agree with that, then you're simply blind. It's a true fact, isn't it? But those changes they've made and will keep making in the near future are not enough to maintain their sales lead over Tesla, and now analysts are predicting the likes of General Motors and Ford will have a lower market share within a few years. Do I agree personally? Well, I'm going to tell you at the end of this video what I think about this, if this is true, and then I want you to tell me what you think as well. This prediction comes from Adam Jonas. He said this within the last 24 hours. He expects Tesla's US market share to grow to 18% compared to GM's 12% and Ford's 10% by the year 2030. In other words, he predicts that GM and Ford together will have 22% of the US market share, and Tesla by themselves will have 18%. But he thinks that Tesla, because they make more profits and revenue per car, will actually have more gross revenue than GM and Ford combined. It actually makes sense if you look at their current income statements. Today, General Motors' share in the US market is 14%, Ford is 12.5%, and Tesla is only 3.5%. So Tesla has a lot of growing to do to get to this point. But Tesla's share is continuing to grow. Even in spite of a shrinking market, the pandemic, and ongoing chip shortages, which actually have probably helped Tesla to gain market share, if anything. This is what Jonas actually said on his note to investors. Most auto investors we speak still struggle with the idea that Tesla could ever be bigger than either GM or Ford. We expect Tesla revenues to be larger than GM plus Ford combined by 2027. The zero-sum game is hard to see today. Should become obvious over the next 24 months. So Jonas is saying we, as in he's speaking for Morgan Stanley, the investment bank as a whole. He said, take a look at January US auto sales. Tesla US market share was 4% on sales, up 63% year on year versus the broader market unit volume down 10% year on year. For the full year, we conservatively estimate Tesla's US share will average 3.5%. We estimate the typical sold commands on average transaction price of approximately $60,000 or roughly 30% above the US average ATP, implying an adjusted wallet share of 4.6%. Applying our Tesla North America growth forecast through 2030 to our forecast of US SAAR, we estimate Tesla US unit share reaches 10% by the end of 2026 and nearly 18% by 2030. We estimate Tesla's share of US wallet could reach 10% by 2025 and 23% by 2030. In other words, Morgan Stanley is saying that by 2030, Tesla will take 23% of all automotive revenues in the United States. That's a pretty big number for one company. He says it's a zero-sum game in a low-growth auto market. If someone gains share, we believe theirs must be a group of share donors. We estimate Tesla can gain well over 1,000 basis points of share by the end of the decade, implying some significant share donors along the way. In other words, others will lose while Tesla gains is basically what he's saying. For example, we estimate GM's US market share, 14.6% in the US in 2021, falls to 14% by 2025 and 12% by 2030. If this happens, this would be pretty shattering for General Motors because obviously their market share has been declining for a few years already now. We estimate Ford's US market share drops from 12.5% in 2021 to just over 10% by 2030. We forecast Tesla's share of US auto wallet revenue share to surpass GM by late 2026, early 2027. Jonas, to reiterate, predicts Tesla's US market share will hit 10% by 2026. GM's share will drop to 14% or less by then, before it will drop to 12% by 2030. Now, Ford's share will dip even lower by 2030 to just over 10%. So even though Jonas says that Tesla's market share won't surpass that of Ford or GM by 2027, if you combine the two together, he does predict that the EV manufacturers' revenue will be larger than their combined earnings and that this trend should become obvious in the next 2 years. And obviously, he's predicting that in addition to that, Tesla's going to be making massive profits because they're already making the highest profits per car in the industry. Now, what about some context? Tesla recently surpassed BMW for total sales volume in the US, selling 16,000 more vehicles regardless of power source than the Germans, 352,471 sales versus 336,644. It also sold more vehicles than Lexus, 304,000, and Mercedes-Benz of 276,000. You can imagine how bad that will be, though, for those German automakers, say in 5 years from now when nobody wants gas cars anymore. I really do think it's going to get to a position, and I've been saying this for a long time now, where people will perceive gas vehicles as being not luxury at all, which they're not, and also as being old technology, like having a BlackBerry phone or an old Kodak analog camera or a Nokia 3310. That's the way they're going to be perceived because truthfully, that is what they are. These gas vehicles have not really changed very much over the past 20 years. One thing people are forgetting, and there's been a lot of criticism of Adam Jonas's comments here. I 100% support what he says. In fact, I believe he's actually being potentially conservative. Why do I say that? Well, the reality is General Motors and Ford, like all of legacy auto, have massive amounts, billions and billions of dollars of stranded assets right now that are going to be useless by the time we get to 2027. Ford and GM still think they can still sell more than 50% of their cars in 2027 as gas vehicles, way more than 50%. Now think about this. GM says they're going to be on a run rate of 1 million electric cars in 2026. Well, what does that mean for the rest of their cars? That means less than 25% of GM's auto sales will be electric in 2026. Are people really willing, en masse, to continue to buy gas vehicles for the next 4 or 5 years? Really? Are they really willing to do that? I don't think they are. GM will have to write off, Ford will have to write off billions of dollars in losses and reinvest that money into electric cars. But the biggest problem here is not that. And that is a problem. But the biggest problem comes down to one fact. GM and Ford do not have enough battery supply to pivot. Nor does Toyota, nor does anyone in legacy auto, bar maybe Volkswagen. GM and Ford have nowhere near enough battery supply to compete with Tesla in 2026 or 2027. That is the biggest issue. Tesla have their own supply, which they're ramping up. They have Panasonic. They have Goshon High-Tech, which will be building factories in the US for lithium iron phosphate battery supply. They have Samsung. They have BYD, and they have LG Chem. Now, all of those manufacturers are competing with each other to supply Tesla. Oh, and I forgot the biggest company in the world, CATL. I mean, that is battery supply from 7 different places. All of these automakers are competing with each other to supply Tesla with batteries for massive contracts. It's not just, remember, it's not just supplying Tesla and getting the contract. It is the prestige and the marketing that comes with saying you supply Tesla with batteries. That can be used to get you contracts with pretty much anyone else. Too many people also forget the fact that right now, Tesla has more demand than they've ever had in the United States. And that is in spite of the fact that they're being handicapped enormously because they don't qualify for the $7,000 tax incentive. That's a $7,000 handicap. And in spite of that, they still have more demand than they've ever had before. People don't seem to understand that Tesla can lower the price of the Model 3 and the Y as supply grows as well. With massive gross margins, they could easily lower prices by 5 to 10% and still compete. Plus, when they're on an even playing field in the United States and every manufacturer gets the $10,000 credit or some kind of credit, then that will be much easier for Tesla to ramp up its sales and create more demand using different demand levers. There's still a long way to go for sales numbers of the Accord, the Camry, and the RAV4 or other mid-size SUVs to be met in the electrification field. As these don't have an EV version anytime soon, it will be easy for Tesla to take that market from Honda, from Toyota, from Ford, from General Motors. In addition, by 2027, Tesla will undoubtedly have a smaller 25,000 or something along those lines electric car. Why else would they be getting 200 gigawatt hours of battery supply per year of lithium iron phosphate batteries just for the United States alone? That is literally millions of cars. Obviously, some of that will go into, I imagine, battery storage, but a lot of that is going to go into cars, and that's millions of cars. So clearly, Tesla do have plans for the more affordable electric car, which I believe will come in probably 2023 or 2024. In the US, that is. Add to that the Cybertruck, where they have 1.3 million pre-orders. A potentially an electric van and other high volume vehicle can always be added later as needed. In addition to that, if full self-driving is solved by the end of the decade, they don't need any special vehicle to reach high sales and high revenue. Revenue is key here. Not just sales, but revenue. So let's get back to the thing that matters the most, battery supply. Have a look at this battery supply that Ford have. Have a look at the battery supply that General Motors have. Have a look at the battery supply that they have planned for 2027. And then you tell me, realistically, if you think they can compete with Tesla and if they won't potentially lose even more market share than what Adam Jonas here is predicting. Thanks for watching the channel, and I'll see you again on the next video. Bye-bye.